So I have Sky Pinnick here on the line. So Sky is the director of C21. C21, I already explained to them why we are doing this meeting. So we already covered that you were here last year and that a lot of things happened since then.
Yeah, that's
and
for
that
sure.
we both felt that it would be good to update everyone on C21, and that unfortunately you couldn't make it over here to come here to present in person, but this is a way we could handle this. Just before we start, I have to keep in mind that C21 is a publicly traded company, so there might be forward-looking statements in this call, and I would advise you to see the full disclaimer at cxsky.ca. So Sky, I call Sky Pinnick, the last man standing from the Oregon crowd, because a lot of things happened with the Oregon acquisitions. But Sky actually stayed with the company, and he is really working hard together with the new management, with Sonny, to focus on operations, get the cash flow going, get the revenue going, and protecting shareholders' interest, because he's a shareholder himself. So we're all aligned in this thing. So Sky is the founder of Phantom Farms. Phantom Farms is a big grow operation, as you can recall, last year in Oregon, and they're just in the middle of the harvest, and we're gonna deal with that later. And yeah, let's start. So the format is going to be that I'm going to ask a couple of questions to Sky, and then Sky will answer these questions, and then we'll give the floor to you if there are questions that are on your minds. So Sky, let's start. So what happened since the presentation at the Cannabis Capital Convention last year, September?
Yeah, well, Peter, thanks again for having me. It's great to be able to connect with you guys and share a little bit of the updated C21 story. Wish I was there in person, of course, but I guess we'll have to rely on technology to help tell the story here. So, since the conference last year, man, it feels like 5 years of cannabis industry evolution has happened. I think we're all sort of starting to see the industry move towards a cannabis 2.0, and the money's getting smarter, the operations are getting smarter. It's kind of a really exciting time in the cannabis space, I think, because it's growing up, in my opinion. We're not we're not hearing anymore about companies bragging about vast amounts of grow space and as the key value contributor and producing millions of kilos of cannabis. We're not hearing anymore about companies expanding to the far reaches of the earth. We're starting to see it consolidate down to a key component, which is running an efficient business. I think we're even seeing deals getting unwound and jettisoned, right? So we're starting to kind of evolve into this new 2.0 and really get to something that I care a lot about, which is running an optimized and efficient business. And so I'm happy to be part of the evolution and arrive here at 2.0 with the current management. I think we're starting to see new buzzwords out in the industry, like path to profitability, cost saving measures, and right sizing operations. This is a lot different than just a short 12 months ago, where it was expanding to foreign countries and expanding into lots of states and opening 10s and 20s and 30s of dispensaries here and there, and building huge facilities. So the buzzwords are changing, the industry's evolving, and I think we're just sort of getting past the early honeymoon phase of the industry and moving towards, like I said, that viable, the real and viable business practices that really should be the foundation of any industry and any business. And we're evolving to that. So the industry is growing up, and I really feel like C21 is leading, is on the right track, and in fact, in some cases, maybe sort of leading the charge in that space. So that's
right.
Yeah.
Yeah, agree. And so before reconnected. I already explained what happened in the share price of C21. At first it was a double, so for the lucky guys out there, they could have made a lot of money off the conference, but reality is that most didn't, so they are at a significant loss now. But having said that, it's across the board. All the US multi-state operators and Canadian names are just, in the tanks. So C21 actually is somewhere in the middle of the decliners. But what's your take on that?
Yeah, I mean, that's right. We're seeing a decline across the entire sector, right? It's a macro shift in the industry right now. C21 isn't isolated. Yes, there is stress on our stock price right now, but it's reflective of the industry and less of the business. So, again, the honeymoon phase is over, and people are starting to get nervous about profitability. Fortunately, we're a smaller company, and we were sort of able to see the importance of this change a couple quarters ago, and we've been able to pivot our business and scale accordingly, sort of in advance of what we're starting to see now with the larger cap companies. And so in doing so, we've been able to start these cost saving measures in advance, and we're starting to see the benefits of that in reducing costs and expenditures. We're seeing this trend all the way across all the publicly traded companies. And I think really this is where our new CEO, Sonny Newman, as a core operator, has been instrumental in streamlining and integrating our operations. Previously we had a very visionary CEO who was out, very much playing to the Cannabis 1.0 playbook, where it was expansion and it was a land grab, and now we're sort of fine tuning into this operations and profit driven model. And so with Sonny Newman at the helm, we're very much on track with that. We're aiming to be profitable this year versus some of our peers who have the same goal for the end of next year. And I think that's pretty important because with larger market caps and maybe more cash on the balance sheet for our peers, they're operating at significant losses. So I'm nervous for them, having to eat into those cash reserves over the course of the next year as they move towards profitability, where we're just on the brink of profitability right now, and therefore we'll be self-sufficient. We won't have to do as dramatic of equity debt raises, dilutive raises. So I think we're in a great position right now, and it's sort of a fortunate thing that we are a smaller company. We're more nimble, and we were able to identify this challenge and shift and pivot at the appropriate time, and right on the cusp of the evolution into Cannabis 2.0. So I think we're sitting in a pretty good position.
That's very interesting, Sky, about the smaller company. I haven't thought about that yet, but indeed, for you, it's basically running 2 dispensaries in Nevada and a grow operation in Oregon and extraction, and that's it. You're not like an Aurora who's all over the world right now, trying to get something going there. So it's easier to.
Yeah, exactly. The bigger the company, the bigger the problems, the bigger the change that it requires. If we consolidate our operations a little bit and we reduce some redundancies, and let's say maybe we scale back, a headcount of 20 people, well, our peers may have to scale back 200 people and $50 million in operations to have the same impact on us. That's a much bigger task. I mean, it's a lot harder to do when you're operating in 5 or 6 different countries and a bunch of different jurisdictions. So again, I think being a smaller company and nimble right now is certainly playing to our advantage.
Yeah, and so we briefly discussed already the regime change, as I call it. So Rob Cheney stepping down as CEO. So there's a parallel there with the Cannabis 1.0 and 2.0 analogy that you made. That 1.0 was the visionary, the CEO who promoted by the news release and over-promised and under-delivered in the eyes of the markets. And 2.0 is just the other way around, right? Under-promising and over-delivering. That's what you're trying to do here.
Yeah, that's right. The whole sector's evolved. We're part of that evolution. We're definitely moving towards that. I don't want to say that we're under-promising and over-delivering. I want to say, we're focused right now on operations and not promotion. We have already right-sized a tremendous amount of our operations. We're on a path to profitability, as I mentioned. Once we get to that point, that's when we're going to go back to looking at, promotion and expansion and sort of, evolving from there. But right now with Sonny Newman at the helm, very much so the agenda is make sure what we have is a well-oiled machine operating at optimum efficiency and is profitable, because that will allow us to withstand the test of time. Sort of as the capital markets figure out where they are, and certainly there's going to be some attrition in the marketplace, and we'll see where things net out at the end. If we're profitable, we will be able to withstand that time. We don't have to expand right now. We're expanding internally. We have internal growth. Our sales continue to grow. We saw a 27% increase in revenue in quarter two, up to 9.86 million, which is up 27% from quarter one. Our quarter two adjusted EBITDA of $800,000 with a gross margin of 44%, which was up from quarter one. So you can see we're growing internally. And so the new regime started in about mid-July, with the goal to integrate and restructure the corporate overhead and some of the operations in Oregon. You have to understand that in Nevada, we had one business. We have two locations, well, technically three locations, but it's under the umbrella of one business, the Silver State entity. But in Oregon, we have four different and separate businesses that starting in July, we started integrating those businesses together. And that's where the real efficiencies start to come. And so with those efforts, we've seen already in excess of $5.4 million in annual run rate savings. So that's significant, because that's all straight to the bottom line. This is, we started and we did the majority, 80 or 90% of those cuts were done in the first 30 days. So all it really took was just saying, okay, we have all these different pieces. Let's put them together in an efficient way. And in doing so, we've saved a tremendous amount of money. To me, this is the, at the core essence, this is the benefit of mergers and acquisitions, is you bring these things together to create efficiencies and scale. And so we just hadn't, we closed our final business in Oregon, closed the purchase of the final business in Oregon at the very end of May. So really that was about the time where we were able to start actually making these changes. The key thing here, I think, too, to remember is that these cost savings are going to be reflected in our Q3 and Q4 financials. So our quarter two financials with positive EBITDA of $800,000 doesn't even take into account these cost savings yet, because we started them right in the last week of quarter two. So really we have a very favorable horizon in front of us. Let's see here. I just wanted to make sure that I think one kind of.
What can you say about the last month? Last month that you reported the revenue figures for that?
Yeah, well, so our August revenues were about $3.84 million, which is a 17% over a quarter two average. So we're continuing to grow organically even into quarter three. And we'll have our financials coming out shortly, as the end of our quarter three is tomorrow. So I think that kind of the key thing here is that we evolved out of sort of the .com mindset, of 15 or 20 years ago, where it was, spend money to win. We saw that in the .com boom too, where, huge VC companies were coming in and backing these .com companies where everyone was placing these huge bets and spending money trying to be one of the survivors. And ultimately it came down to the strong companies with real operational business plans were the ones who survived that dot-com bust. And I feel like we're being a profitable company is going to help ensure and galvanize our company against that bust, that inevitable bust that's coming.
Yeah, exactly. And just to remind everyone, when C21 bought Silver State Relief from Sonny Newman, a significant part of that transaction was via a vendor financing, where the purchase price for Silver State Relief was paid on a monthly basis by cash flow produced by Silver State Relief. So this debt has been to Sony has been restructured a few times, and now they are paying on a monthly basis. They pay funds back, and eventually it should go down to zero. So this is obviously something that the market is somewhat worried about, like how is this debt going to be repaid? Does it have to be restructured again? So what could you say about the whole debt structure, the debt situation with Sonny Newman, who is now also CEO and largest shareholder?
Yeah, well, I mean, it's a great point, Peter, and I think this is probably the most asked question we've received in the last couple of months, and rightfully so. If I was not involved with the company, I would certainly want to know also what the plan is. And so, as you mentioned, Peter, we have Sonny restructured his debt. The payments are about $800,000 a month plus interest. We've maintained all those payments, and what you have to understand is that Sonny is incredibly flexible. He's been working with the board. He's working with C21 intimately on how to solve this issue, and he restructured the amount to $800,000 because the Nevada operations generate enough revenue to cover the debt. So he purposely built a model so that it wouldn't stress the company. So he's very conscientious of this. His interests are fully aligned with all of us shareholders, and I say all of us because we're all in the same boat together. We're experiencing the same highs and lows together. And Sonny's our largest creditor. He's our only creditor, really. He's our largest shareholder, and he's the CEO. And I think this is why we're not quite in as dire of a situation as some of our peers are out there, who are seeing their credit facilities being recalled, and it's a little bit scarier looking at that debt. It's perfectly normal for a company to have debt moving forward. We just want to make sure that we're not going to drive off a cliff, so to speak. And so that's where we're very fortunate to have Sonny as our creditor, and he's the CEO, so he's working on solutions to restructure and figure out a solution for that debt that's beneficial both for him and for C21, because it's a symbiotic relationship. So, as we know, the capital markets have changed pretty dramatically in the past just couple quarters, and the access to non-predatory capital is challenging. Sort of the access to these to capital has dried up in a sense. And so I think what's great is that Sonny's not looking out for himself and forcing us into a incredibly dilutive equity financing at these lower share prices right now that would be incredibly dilutive to our cap table. He's not forcing that and saying, pay me now because I'm owed money and I don't care if it's dilutive to the company. In fact, it's the opposite. He's pushing, he's working to make the company efficient and profitable so that the company is self-sufficient and can service the debt on its own without having to create a dilutive financing. Certainly, part of our solution may include some form of an equity raise. Of course, there will be some form of dilution, but if we look at, let's repaying a debt of north of $20 million right now, that would be at today's share prices. It's pretty easy to do that math and realize how dilutive that would be. And so, I'm very thankful that Sonny has the patience and temperament to be able to work with the company towards a positive solution that works for both him and the company. We're out there working aggressively on, like I said, the best and least dilutive solutions for the company. These things take time, and especially in this market right now, we're not racing to enter into an agreement with a company that isn't right. I think that was, part of the unfortunate mistakes of Cannabis 1.0 was everyone was moving as fast as humanly possible, and not to point out any specific things, but generally speaking, the industry and players in this industry were entering into agreements that weren't necessarily favorable long term, because they were trying to raise money real quickly to buy the next thing, to release the next press release, to promote the company.
Yeah.
So right now it's great that we're working internally trying to solve this problem. I know to shareholders and people outside the company, it seems like we're probably moving at glacial pace. But with that said, you have to understand that we are every single day, all day, the board and Sonny and our advisors are working diligently on arriving at a solution, and we're not jumping at the very first opportunity. There's been plenty of things that we could have done, but we don't think that they're in the best interest of the shareholders long term. So looking for the appropriate solution is really key. And fortunately, because we are in a cash flow positive situation, we have the flexibility to evaluate the best strategies to move forward, and we don't have to do something today to survive. We certainly appreciate that the debt has been really hard on the stock price, but it's also been the huge catalyst to moving towards our version of Cannabis 2.0 and increasing EBITDA. So I think the net result over time is going to be a healthier, stronger company that's not dependent on an equity raise, a dilutive equity raise to just survive.
Right. Okay, Sky. Just a quick point of order before we continue.
Mm-hmm.
I have a few more questions for Sky. It's about the vaping crisis, about how the harvest in Oregon is going, what's going on in the Nevada market, how is the M&A market, are there any expansion plans? But before I ask those questions, I would like to give the floor to you, because there might be questions about this debt that we just covered, or about the items we covered before this. So, are there any questions? I will repeat the question.
Thank you.
From Mike. Are there still a lot of convertibles outstanding?
There are convertibles outstanding. I don't have the current tally in front of me, so I don't want to misquote. But there are convertibles still outstanding.
Yes, there are. What I can say about this is that there are significant amount of convertibles have been converted, but there's still also an amount outstanding, and I think they expire in December 2020.
Yep.
So they are still good for a year, and they are convertible from the top of my head at 80 cents. So if the stock price until December doesn't go above 80 cents, then they have to pay back the debt, or restructure it, or refinance it. I'm also looking at John here on my right side. That's right. You know, but this is the debt situation, right?
How much debt overall is in the company?
I don't have the exact number in front of me, but the majority.
What's Sonny's portion of this stuff?
Sorry.
How much?
What's Sonny's portion of the debt?
Sonny's portion of the
Sonny's is the majority of the debt.
Yeah.
And when you talked about
I believe there was something in the order of between 15 and
broad range, but between 15 and 22 or something that has to be paid total.
overall?
Yeah, just add to Sunny still, because the original deal was something in the order of 28 million. Significant. There's a couple of million of that has been already repaid, structured.
How much do they pay?
This is just from the top of my head. Just keep that in mind.
How much do they pay for?
Now they pay 800,000 US per month plus interest, and starting January it will be 2 million a month from the top of my head. Yeah.
So 2 million, so that you could be paid off.
Yeah.
But do you have enough free cash flow to pay the 2 million a month?
Not currently, but that's part of the restructure that we're working on Sunny with currently, is to minimize that, to stretch that debt out proportionately, and that's part of the debt solution that's being currently worked on.
And if I recall correctly, Sky, this is Peter again. The deals in Oregon, they included. The deals in Nevada, of course, too, but there's also a significant amount of real estate that you own within the company, right? It's not all leased.
That's correct. In Oregon, there's a little north of $6 million US in real estate assets, and certainly those could be brought to the equation. We're starting to see if you're sort of following the industry, you've seen in the last couple of weeks a bunch of real estate investment trusts asset purchases with leasebacks. So that's it's a very elegant way to solve some of these problems. Not solve the problems, but to bring cash into the equation. So that's certainly one of the routes that we're exploring and trying to evaluate the best solution for the company.
Okay, great. So just one more question: is he interested in converting into stock at these prices, or would that be too big of a shareholder position?
Well, I think from a company standpoint, that's not what the shareholders would appreciate. To have someone.
No, I understand that, but
convert $20+ million in it at today's rates is incredibly dilutive. So we get that question quite a bit, which is, would Sunny just convert into equity? Well, he's already our largest shareholder, and we're trying to find a more elegant, creative solution right now that's less dilutive.
But my question is would he want to do that? Or does he want to have to pay back on cash instead of shares?
I think his preference is cash. He already has a huge position. So, but like I said, he's being accommodating and working with the company. So, not to say that it's off the table.
Okay, great. So let's move on in the interest of time, to the vaping crisis.
Mm-hmm.
What struck me is, there's a lot of misinformation about this, and you will probably deal with that in a bit. But what I found very comforting is that on the day the vaping crisis was there, C21 actually tweeted an ingredient list in response on what's actually in the C21 cartridges and vapes. So could you give us some more color on this?
Yeah, well, so that tweet that we posted is because we believe in full transparency of our products, and certainly this vape crisis is absolutely real. You can't ignore the fact that there's been health issues and even some deaths surrounding vaping. And it doesn't just apply to cannabis; it's across vaping as an entire category. So, I think the cannabis vaping is maybe a smaller percentage of the bigger crisis. In my opinion, it's a little bit over sensationalized in the news. It's an easy thing to make a big deal about, especially sort of as cannabis is coming into legalization, and the bears in the room would say, oh, cannabis is a bad thing. See, people are dying from it. And that's not the fact. And all signs are sort of in these independent investigations that some of the news companies are doing, are all sort of pointing to black market vaping products as the culprit in the case of the deaths and health issues. So the fortunate thing is that we operate in the legal system where there's a high level of testing requirements, et cetera, et cetera. So none of our vape products have had any problems. Knock on wood there. But they're made with pure products. They comply with all the state laws that we operate in. They adhere to all of the standards. And so we're fortunate in that in the case of Oregon, there's been a ban on certain vape products, and the benefit of our company is because we use cannabis-derived inputs, we're not restricted by this ban. So in some senses, we're actually seeing an opportunity in that some of our competitors on the shelves are being taken off the shelf because of the ban, and our dispensary partners are adding, are increasing their orders with us because we create, a pure product that is not part of the ban. So, the other interesting thing too is that we're seeing an increase in flower sales because certainly, even if our vape products are pure and safe, there's still going to be some customers that are just uncertain about vaping in general. And so those folks are just going, okay, well, I'm not going to buy a vape cartridge today. I'm going to buy a pre-roll or some just raw flower. And so we're starting to see those, flower demand is increasing. And, we're also at a time where we're also starting to see the price of wholesale flower is almost double. Actually, it's a little over double of what it was this time last year. So,
Wow.
So we're, we hate to be, talking about opportunity in a time of crisis, but on the flip side, because we are, clean green certified, we use, great input materials, and we have a very high standard. We're seeing absolutely an opportunity here, not only in our vape products that meet the standards, but then also on the flower side. So it's actually helping us in certain categories. And of course,
what I would like to add to this, Guy, is that so people from outside the industry, they sometimes think like you need to have vape cartridge to consume THC if you want to have something easy. But there are many devices on the market that are also very easy that can use flour. So you just put some flour in the machine and you light it, or you have an electric machine, and you can vape it just as easy as a vape pen with cartridge. Absolutely.
There are other vaporizing products that you put, as you said, raw flour into it and you get the same effect. So it's really just targeting one small piece of our business, but there are other solutions, and like I mentioned, it's actually creating an increased demand on flour at, fortunately, a time when the prices are double what they were just a year ago. So and I think too, this vape crisis, we fully support all, the CDC and the health authorities and everybody that are working towards finding out exactly what the problems are. Whatever they find and discover, we will absolutely comply with if our products don't meet those standards. So, I mean, we're incredibly supportive and conscientious of the challenge, and we hope that a solution is found quickly and that the bad products are taken out of the marketplace as quick as possible, because obviously we don't want there to be problems and the worst thing is people dying from these things. So we fully support whatever results come, and as you mentioned, Peter, there's other ways to consume the product. So this is literally just sort of targeting one intake mechanism.
Yeah, indeed. And so you mentioned that wholesale flower prices increased because of this, and also because they have, they have taken the tanks, so they're finally recovering. It's basically, it could be good timing for you because you're in the middle of a harvest in Oregon, right? I saw some pictures on Twitter.
Yeah.
What can you tell about that?
Yeah, I'll touch on that real quick because I'm sure we're running out of time here. The harvest is going exceptionally well. We've been blessed with really favorable weather in Oregon. So our large outdoor farm is the one, where we create a bunch of biomass over the course of the summer season. And so we're about, a little over halfway through with the harvest. I think we've tallied a little over 10,000 pounds of wet weight so far. For the quick math on that, the dry down rate is about 20 to 25%. So we've literally harvested over a ton, 1 ton of usable dry flower. So that's a substantial amount of product that, as we just discussed, is becoming of more and more demand in the state of Oregon. So the timing is perfect. One of the things that kind of gets me excited is that we have a few new strains coming out this year. And, we have a blue cheese times blueberry trinity, which we're calling cheeseberry. We have an orange cream times sour banana, which is called Arananana OG. And we have a San Fernando Valley times mimosa, which we're calling the Bend OG. And I say that, I like saying those names because as a marketer, that's kind of one of my favorite parts of this whole thing is naming strains. So it's
Do you think there's a prize winner among those three again, like some of your previous strains that have won all sorts of prizes?
Yeah, we're optimistic. We've got, we're excited on these strains. We think that they're, innovative. There crosses from some of our existing strains, and we're always excited to bring new things to market because you never know where they're going to land. We've done some, internal product testing, of course, and the internal feedback has been received exceptionally well. So we're really excited to bring these things to market. Yeah.
All right. I see indeed that we have about 5 minutes left. Are you okay to have a little bit? You still okay in time if we end up with minutes over time?
Yes.
Okay, great. Yeah. So let's move on to the Nevada market. So what's going on there?
Nevada continues to just be a robust market. Obviously, we're continuing to grow there organically through our own 2 dispensaries. Our customer counts remain steady, month over month growth. These are just very well run operations where you have great pricing, incredible customer retention and loyalty. So, in Q2, we saw nearly 160,000 customers in our 2 Nevada stores. That's a significant customer count. And in the first month of Q3, we hit almost 60,000 customers. So if we sort of track that trend line, we could potentially, surpass the Q2 for sure. Our Fernley dispensary, which opened in just about mid January, just continues to impress us with organic growth. It's in a sort of a remote part of the state that has sort of a captive audience. And so you would think at a certain point we'll sort of reach the max customer penetration. But, here we are in October and we're still seeing organic growth there. So we're excited about that one. For Silver State, we brought the Hood Oil vape cartridges. That's a brand from Oregon. We brought that to Nevada in late May, I believe, or early June is when we launched it. And, we've surpassed over $1 million in sales on just that product category, on that product in just since June. So it really does show that the power of brand and branded CPG is valuable. And really, what we're doing is we're cross collateralizing the goodwill and the IP of the assets that we purchased in Oregon, and realizing the benefits of those assets in the state of Nevada, where we have a much larger distribution channel through our own dispensaries. And then later this quarter, well, it won't be quarter 3, but into quarter 4, we will be deploying the Phantom brand next, with pre-rolls and sort of raw flower options, prepackaged flower options. So, we'll be transporting another Oregon brand and IP and all of the benefits of that into Nevada and putting that into the pipeline. So excited about those sort of internal growth opportunities in Nevada at the moment.
Great. And we saw some M&A activity in Nevada too. We saw a few recent transactions, even in this market that has been very soft. What can you say about that, and what can you say about M&A activity in general in the cannabis space?
Yeah, well, so obviously the M&A sort of volume has slowed down quite a bit in the sector entirely. But as you mentioned, in the past couple months, there's been, a few key M&A transactions in Nevada. And I think Nevada is still a very attractive target for M&A. And, it's primarily because it's a limited license state. So the licenses that exist are the ones that are out there. And so there's only a few. So to get a license, you have to actually buy a company. Whereas in California, for example, if you want a license, you can go apply for a license and get one. So it forces M&A activity in Nevada, and it continues to be a very robust market. So a lot of interest. And I think why that's really important to us at C21 is that it's setting a positive benchmark for valuations, and and continues to show that there's high demand and value in the licenses that we own. So it's a very nice standard to set. Certainly we've seen interest in the Silver State relief assets we continue to evaluate all these opportunities. We've kind of got a good thing going there, so we're kind of hanging on to what we got. We've entertained suitors with big valuations, but had we done an M&A transaction with them, even just 2 months ago, where would we be now? We would be sort of in the same boat that we're in with, the decrease in the sector, and in fact, most of their stocks have actually suffered as much or more than ours. So we would sort of be in the same general position, but we wouldn't be in control of our destiny. So again, we're not, because we are in a position where we're sort of self-sufficient, we're not forced to jump at the first opportunity. And I think that's an incredible position to be in, because if we were desperate, we would be forced to make some of these deals that would probably in the long term be less advantageous to our, C21 and our shareholders.
Yeah, that's a good point with what you mentioned about Nevada being of interest, because there's a limited amount of licenses there being issued. What was the current count? 70 or 80?
I believe it's 67.
Licenses?
Yeah.
I'm sorry?
Oh, I believe it's 67 licenses, but someone just surrendered one.
In the whole of Nevada.
Right.
So if you have, and Silver State has 2 of those. Two dispensaries, right? 2 dispensaries
and a cultivation extraction facility. So we have 3.
So the recent transaction that we saw in Nevada, which was quite a large one, from the top of my head, I did some metrics and looked at what they have compared to Silver State, and that if you do that math, it was like 3 or 4 times what C21 is priced at right now. So I believe there's a lot of upside in an M&A scenario. But having said that, so you're very focused now on the profitability, where you are now almost at and the restructuring and the cost saving. But if we look a little bit further than that, are there any expansion plans? Do we have already something in your sights?
Well, look, we're not going to let a good expansion opportunity pass us. But as we've discussed, our primary focus in the near term is streamlining operations and moving towards profitability. We're not actively looking to expand in Nevada or California or anywhere else. In the near term, of course, when we are ready to expand and sort of evolve into the next phase of this business, we think our focus for growth is really going to be targeted in Nevada and on the west coast of the United States, sort of where we have a geographical foothold at the moment. And we think that that's smart instead of, saying, oh, we're going to expand all across the US and Canada. And, it looks like Mexico is going to be a player here soon enough. Or even Europe. We're focused right now. I think that was sort of some of the mistakes that Cannabis 1.0 made, was spreading too far, too thin, and diluting your resources and your assets across vast geographic areas. And so, we've got a great foothold in Nevada and a great foothold in Oregon. We're going to expand. The next steps would be to look at opportunities in Nevada. Obviously, California is a very attractive market. But even in just the last couple months here, we're starting to see that there's some obvious challenges in the state of California. So we think that it's like sit on the sidelines with California for right now and let things sort of settle and figure out where they are, and certainly soon enough there will become some strategic opportunistic opportunities that we can look at in California and maybe potentially Washington, but sort of focusing on the west coast of the United States right now. And I think of it sort of as the crawl, walk, run. We don't want to start by sprinting, and I think that was sort of the Cannabis 1.0 was everyone was off to a sprint, and they didn't crawl and they didn't walk. They just started sprinting. And so again, if we're now into 2.0, it's maybe we're in the walking mode right now, and let's get our stride worked out, and then we'll be ready to run when the time is right. And the time might be right, once the Safe Banking Act passes through the Senate, which we anticipate, we could see that even by the end of the year. Optimistically though, by the end of Q1 in 2020. That is going to open up access to the markets and growth capital. And, I think that at that time, the C21 model will be a well-oiled machine and will be able to support and participate in sort of that natural evolution in the industry. It's really going to change the dynamic in the United States and access to capital in the United States.
Yeah, that would be a great catalyst. But just, I'm not holding it against you, but what are the odds of this thing passing?
Well, look, that's like trying to predict the weather. I think unfortunately this impeachment hearing is distracting people's attention. So that's going to sort of cannibalize some of the Senate's time. We are thinking though that the resources that we have and the connections that we have say that it's very favorable, and it's everyone is cautiously optimistic that it will pass through. So it's just a matter of timing.
Okay. Great. And last question from my side. Recently, Todd Harrison joined the advisory, or not the advisory board, but he became an advisor, strategic advisor to C21. What can you say about him and about the idea of getting him as an advisor? And do you see the fruits of this already from the cooperation?
Yeah, no, it's been great working with Todd and his group. It's been incredibly valuable to have a trusted resource in the room, and a group that's advising us in through these times right now, and helping us uncover what some of the potential challenges and pitfalls of some of these different options are as we look to restructuring Sunny's debt and just our operations and path forward. So it's been incredibly helpful. He's brought a lot of options to the table and continues to advise and help us as we move forward. Again, I say we are aggressively working on solutions for Sunny's debt and and a path forward. And Todd's been a great resource for that.
Great. Okay. Any questions from the audience?
It's fine.
I took your question. Oh, okay. Sorry, John.
Yeah, Sky. I would like to thank you very much for this update, because I could tell you something. When Canadian of course you're American, but when Canadian companies come to Europe or to the Netherlands and they present their company, and then some dire times come, share price wise or whatever, you never see them again. And you are here now. You're doing this call. And that's much appreciated. And in good times and bad times, you should be there. And that's why I would like to have a round of applause for Sky for doing this. Any
Thank you.
closing words, closing remarks, Sky?
I mean, I think I've said it. I mean, I think the key takeaway here is we're working hard to solve the debt challenge. We're hyper focused on making a profitable company, and then we will grow. And through all those things, we're all going through this bubble together. And the ones that will make it through, we think that the companies that will make it through are the ones that are profitable. And I want to thank Sunny Newman, the CEO, for having that sort of resolute vision and really focusing on the operations side. It's, as I said in the start of this talk, that's always been something that's been near and dear to me as an operator, and a business owner and an entrepreneur. It's not about creating a story. It's about creating a business that's sustainable and efficient. So, I truly believe that we're on a great path moving forward. We are fully aware of the challenges and the stressful nights looking at that, and days looking at the stock ticker bouncing around. We think that it's sort of victim of timing and circumstance, and that especially as our Q3 financials come out and we start to realize the proof will be in the numbers. And I mean, Sunny has said that from the beginning. He doesn't want to go write a news release that just says that we have a new flavor of a vape pen on the shelf or something. He wants to just put out numbers because he believes that numbers is the proof, and that the smart investors will be the ones who see that and want to invest in the company because it's a real company that's moving forward and towards profitability. So that's sort of my parting message, is that we're focused on building a real company here and not just a stock promotion. I know we've heard that before, but I think we're really delivering on that now.
Yeah, the numbers show it.
The numbers will show it.
Right. The numbers show it, revenue figures and the customer count. So, all right, well, Sky, back to Oran and Nana.
Okay.
Thanks a lot, and we'll chat soon.
Thanks everyone for being shareholders and for your time, and enjoy the rest of the conference.
Thank you.
Will do.
Take care.
Bye.
Bye.